And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and happy Friday to my fine futures family. It's time for the market forecast. Friday, December the 16th. My name is John Hoagland. As always, thanks for trusting me with your time this morning. Hope you're feeling ready for the trading day today. It's quadruple witching day. Lots of expirations today. But as always, my focus is on finding accurate context. Always thinking about risk management first and staying patient in my trading today. If you're already in the markets, hopefully things are already going your way. And again, as far as economic information, kind of thin today. 8:45, we got the PMI composite preliminary. And 11 o'clock, apparently, one of the Fed members is going to be speaking. Mary Daly is going to be speaking. And again, of course, it is quadruple witching. So we never know what that is going to bring for us in the marketplace. It is Capital Preservation Friday. We have now a new acronym to go along with ACH. Anything can happen. Now we have CPF, Capital Preservation Friday. This Sunday, the 18th at sunset, Hanukkah begins for our brothers and sisters who celebrate Hanukkah, and that's 1 week from the big day when Santa comes, from Christmas Day. So things are winding up for the end of the year. I think there's still some good opportunities for the rest of the year. Next week's economic numbers are largely going to focus on housing, and that is, one of the things that people are focusing on to see if we can avoid a recession. And that seems to be what is kind of controlling the markets this week, and including today. We've got our equities down, except for the NASDAQ, which is only down 0.5%. We got the S&P and the Dow down 1% to start the day here. And it's uncertainty and recession fears peaking after the Fed's 50-point rate hike on Wednesday was followed by some kind of harsh reality from Fed Chair Powell in his comments after the release. Add some technical weakness to that, and yesterday's rout was actually one of the largest drops we've seen in weeks. I'm beginning to wonder if we're going to see the Santa rally. Crude prices have a hold, like kind of a medium time frame and longer time frame downside structure as economic worries challenge demand expectations. We had a brief up move in very short time frame that has now broken one time framing structure. Of course, we're going to see all this on the charts very shortly. VIX is up this morning 2.5% at 23.4. Dollar index 104.5, almost flat on the day, and the yield on the 10-year still holding right around that 3.5 level. And boy, you can see that in the charts in the 10-year. The 10-year has just been very range-bound and seems to be continuing on that path, at least for now. We don't have another FOMC meeting until February. It'll be here before we know it, but it's probably going to seem like a long time while we're going through it because it's probably going to be cold. We're probably going to get some snow. If you live in the northern hemisphere, where I live, we got a little bit of snow yesterday, about an inch. That's really, I think, our first measurable snow this year. Maybe it'll be a white Christmas after all. Who knows? If you like what we do here on the Market Forecast, tell your friends and make sure you hit the lucky like button. Sharing, questioning, feedback, heckling, and love are all welcome here on the Market Forecast. Make sure you subscribe to our YouTube channel so you get notifications when we do go live. Little note again, next week there'll be no group coaching, no make Hogue money. We're just going to be doing the forecast and the recap Monday through Thursday, and that's going to be it for the year. No forecast, no recap, no events the week between Christmas and New Year's or the Monday after New Year's. Tuesday, everything starts over again. We look at it as kind of a fresh slate, and we're looking forward to making improvements along the way next year. Of course, your feedback and suggestions are always taken very seriously here at Top Step, and we're going to have a great year next year. We're all going to do very well. I can feel it already. Good morning, everyone. We've got Shaw Cunningham first in the room, winning the prize this morning. Caprice Ike Wells, good morning. Hell of a week, right? Spencer, it's been a week at that, right? Danny Ireland, I'm looking forward to getting to your email today. I'm going to had a chance to get to it yesterday. Jimmy Decker, Stephen Caesar, Charles Dimitar, Joel, Fred Decker was listening to this song yesterday and thinking it's a good trading theme song. Never Turn Back by R.H. Harris and the Soul Stirrers. Maybe we can look that up and play that on the opening one day next week for the market forecast. I got to be careful. I don't want to get any royalty issues here. Dan Trader, Terry King, Bill Phillips, Jimmy Decker. Are there any SEC or FINRA rules on how much I can manage? Like if I were contracted with 3 companies and $500,000, is there a cap for non-professionals? No. The SEC and the FINRA don't really have much to do with futures. It's the CFTC and the NFA that would be the regulatory agencies overseeing futures. The CFTC does have a little bit of a frown on having multiple accounts because it allows some possible money laundering implications. Now, as far as an individual trader having multiple accounts for different companies, I don't see that there's any real problem with that. Don't take that to the cake. Don't take that to the bank, I should say. Check it out. As far as managing money, the NFA, if you're, I think, managing other people's money, I think you can have up to 12 accounts without registering as a CTA with the NFA. So I don't think you have any real problems, Jimmy, as long as you're not laundering money. All right? I know that there's probably several people here that have funded accounts at Top Step that may have accounts at other places too. So I don't think there's necessarily a cap for non-professionals. Dowitzer, good morning, Serenity Trader. Orion, good morning, Scott Saw, and he conquered. Glitter Sandwich, David. Vince, good morning. Rusty Golfer, my spirit animal, is with us here today. Dan Trader, I'm not 100% sure, but yourself might be 50K, 150K, but if it is other people's money, I think it's about 7 people you need to have a license. Right, but I'm really going on hearsay. I know a few years ago you were able to have 12 accounts trading other people's money as a manager. This is a different situation. You're a prop trader, so you're trading other people's money, but for your profit, not for theirs. Well, for theirs to a degree, right? I mean, 10%, 20%, whatever the agreement is. So, yeah, I think Dan Trader's right. As long as you're not getting up there in numbers, you're going to be okay. DA, good morning. Sarah Hall, prayers and love to you as well. Captain Price, Jeff B, good morning. Naveen, Captain Price. Anissa, Nastic, good morning. Adrian, how's everyone's morning going? Adrian is asking. Jan R, Ron Merlot, you stay classy. Hegel Matters, Alejandro, Snowflake. Don't launder money, Jimmy, right? Yep, no problem. The NFA, their website is relatively confusing, but somewhere in there is the answer you're looking for. Just to make sure, hearsay is one thing, getting it from the horse's mouth is another thing. Mike Rooster, Late this morning, that's all right. You're right on time. George, Razmik. George, I got a house full here. My kids are here. My wife is here. Nobody's working today but me. So the dog has forsaken me. The dog is hanging out with everybody else this morning. She's usually my little office buddy. All right, let's take a look at what's going on in the markets. Again, 845, the only real economic number due out today, but it is quad witching, so keep yourself protected. Always use a stop. Let's start with the daily in the S&Ps. We were pointing out, and had help in pointing out the fact that there is and was a head and shoulders formation. We broke out yesterday below the neckline, an assumed neckline. So we're down below that. Big down day yesterday. How is the volume in New York? I haven't checked that yet. Let's see. Good, but not as big, not as much as you might think on a day like that, probably due to some of the holidays. Yes, 8:45 Eastern, 9:45 Eastern, 8:45 Central. I should point that out. So we've got a potential measured move. If we go from the base of the neckline, maybe the neckline's about here, we're going to, if this measured move does play out, we're going south of 3,800. Going south of 3,800 here in the S&Ps. 3,770, I think, is really the number that I kind of calculated the first time I looked at this. It is expiration. Open interest is useless. We lost 21,000 yesterday. But Monday morning, when you look at your open interest sheet, you're going to see probably a loss of about 500,000 contracts that are going to expire, and they are going to settle in cash. Don't let that scare you. The S&Ps are going to be here for a long time. It's not like everybody is leaving the S&Ps. This is something that happens every rollover. Seems we lose about 450 to 500,000 contracts that we've built up during rollover at expiration. So, with the fact that we've got a technical move in progress, my hypothesis today is simple, but not going to be that easy to find. I'm looking for opportunities to sell strength. If we're going to see this measured move continue to this downside, and it looks like, the market is heading that way already, I'm going to be trying to find a pullback, something that's going to tell me that sellers are still in control. So between here and this measured move, we have weekly kickoff low, which is 38.30. It is based on technical analysis. Market profile information, tea leaves, and chicken bones. Don't launder money. The government hates competition, right? So my idea today is to try and find some sort of pullback, some sort of strength which to look for an opportunity to sell this market. You get a gap from Wednesday to Thursday. We're going to be open with a high probability with a gap from yesterday to today's regular trading hour session. We've got some overnight inventory holding to the short side. A little bit of reconciliation here. I think our short time frame, weaker hands traders are still short. If we can't close the gap, we may find that opportunity with some sort of early structure in the session today to see if we get this market continuing to push to the downside. Moving back to close the gap can be resistance, but if we spend any time back in the range from yesterday, we may accept value from yesterday, the value area special situation play, which could push price all the way to the upper extreme of value. I still view that as an opportunity to sell strength, but there may be upside opportunity in that. Okay. So we're looking at gap rules. Opening range trade may be something to think about. I'm not going to be in a big rush to do it unless I'm seeing something in the market at that time that says, yeah, let's do this. I want to caution everybody because it is Friday, and we've been Monday, Tuesday, Wednesday, Thursday, Friday. We've been up here. We've got probably some shorts that are enjoying some profits here, and if they decide they're going to flatten out for the weekend or something goofy happens for the quadruple witching, there could be that late Friday pop as some traders decide to take some profits off the table for the weekend. I don't know if that's going to happen. Nobody, of course, does. Take a look at the TPO chart. This is the overnight double distribution. We're in the lower distribution. We have excess. We have a B-shaped profile, which is long liquidation, which would be supported by open interest, the loss of 21,000. But again, because of rollover, it's really difficult to read open interest and volume because of rollover. So what I'm thinking is that this market in its current position lost a whole bunch of longs. That's taking selling power out of the marketplace. It's going to take new sellers. Going to take probably longer time frame new sellers to continue this push to the downside, which is part of the caveat towards the end of the day if we're going to see some profit taking, probably in medium time frame speculators. Not expecting the longer time frame to be that active today, as it is expiration unless they're already done with their roll. So, I mean, this is pretty big excess at the high here, right? Yesterday, low excess here. We're opening below low excess. The auction still seems relatively healthy to the short side. But again, I'm going to be, cautiously keeping at least one eye on the market and to see if we do see that late in the day pop. If we do see a continuation to the downside late in the day, don't fight it. Don't fight it. Because that's probably going to be more than just a couple of time frames acting in concert. Crude oil just opening. So I've got February now. February is the front month. The volume is certainly higher. There's only a 6-cent difference between the Jan and the Feb. So I didn't have to change any levels, really. These levels are more zones than anything else. So I don't really feel like I need to change them. That potential weak demand has long time frame and short time frame structure remaining lower. We had a long time frame and medium time frame, I should say. We had short time frame push to the upside, 3 straight days of moving higher in a downside longer time frame trend. Well, yesterday we pulled back. Today we're pulling back. We have a new measured move to the downside. We're going to take this low to this high and then take this high and extend it lower. So the measured move now takes us down to about 68.20 in there somewhere. 68.20. It takes us to last week's low ish. Through last week's low, really. It would be a pretty major move for us to finish that today. I'm not looking for that. So the short time frame upside structure is broken. Weekly kickoff high, unable to support price. We look for these levels to bring in new buyers to the upside. They didn't come in. It's rollover. Now we may see longer time frame sellers adjust inventory to the downside, even though it may still be rollover. Lots of questions about demand out there, ladies and gentlemen. So let's take a look at the 30-minute chart. For a shorter time frame, opportunities, overnight inventory short, a little bit of reconciliation, still putting in new shorts and shorter time frame trades here. This volume here last night, Looks like it's huge, but it's just because of the scale. Okay. This is the new front month. The volume hasn't been that strong in it. This just says that now this is the front month. It looks like it's almost a daytime frame volume, but it's not. So we're opening with a gap. Gap rules. We have a gap here. We've got a naked point of control here to take a look at. We've got a naked point of control down here to take a look at. This somehow got moved. So, this could be one of those repair days where we've opened between 2 points of control with a gap in the middle. We may trade to both sides to take out and recheck both of these points of control. A move back towards this without closing the gap keeps gap rules in play. We have weekly kickoff high, which was supportive for a period of time, now may be resistant upon revisiting that level. I would look forward to an opportunity to do that because, again, why? It limits risk. Limits risk. All right, let's take a look at the TPO charts. 2 days of P-shaped profiles. That is short covering, which we all know takes buying power out of the market. If you're short and you got to get out, you have to be a buyer. We don't really have any high access on this. We're opening with a gap. We don't have any real high access down here. What are we doing? These 2 days of P-shaped profiles. One here too. We've been scaring shorts out of this market all week. If this market is going to continue lower, there's a lot of money out there willing to continue to push this market lower, looking again for opportunities to sell strength. Don't want to sell the low tick. Want to look for a pullback, somewhere I can lean on to limit risk for opportunities in this market today. Selling strength. Sell strength. NASDAQ. It's almost the same read. Head and shoulders broke out, measured move down to here. 10,800. 10,800 is the measured move from the head and shoulders formation. Losing 200 in open interest yesterday. Rollover. It's still rollover. Expiration is today. We won't have to worry about that next week or until March, when the snow is probably going to melt and the birds are going to come back and the flowers are going to come back, and it's almost like playing a country song backwards. All right. Head and shoulders breakout, measured move, open interest, useless, of course, today. It's inert anyway. We're looking for probable loss of approximately 70,000 contracts today on Monday's bulletin. We're going to see that big drop in open interest because a lot of those are going to expire or expire and settle in cash. Again, hypothesis number 1, find a level to sell strength against something that I can lean on so I can limit risk. Overnight inventory, 30-minute chart, is short-ish. There is the question if we're going to open with a gap today in the NASDAQ or not. I think it's a higher probability, of course, in the S&Ps. NASDAQ is holding better. Again, I'm cautioning against the late Friday pop. Tuesday, Wednesday, Thursday, Friday. We probably do have some longs or some shorts in this market that are holding profits. We had a B-shaped profile yesterday in the profile. Why is this doing this to me? Here we go. B-shaped profile, long liquidation. Long liquidation takes selling power away from the market. We are holding right at the low of the overnight session right now. Well, no, we're not really. We're in the middle of the overnight session, I should say. Looking for opportunities to sell strength. I keep telling myself that today. All right. Gold. All right. Well, I mean, it does have an upside hint to it, but it's so range bound here in this area. It doesn't seem to be wanting to do anything. That pullback yesterday was, I think, a little bit of a shock. We lost 10,000 in open interest. Well, what does that tell us? Long's getting out at the low of the balance area. What about the dollar downtrend? I mean, it should be kind of contrary. The dollar has been making new lows day over day pretty much, but the gold seems to be stuck in this area. Take a look at this. This is the dollar. We've got a nice little channel, or as we call them here on the forecast, Dano, in honor of our good friend Dan Hodgman. We got a nice channel here, and it's just kind of pushing lower, and this is gold pricing. It is heading in the opposite direction. It's kind of a mirror image, as it should be, just like the euro would be. But it's still kind of stuck here. Is it looking for a deeper move before I'm pushed to the upside? Is it looking for a break to the upside from this channel in the dollar to head in the opposite direction, to head lower? Stay tuned to as the market turns. Stuck. Here's the 30. Okay, we got a big gap above with which to kind of perhaps fill. Are we holding overnight inventory? Maybe a little bit to the long side now. No gap today, but a gap here for us to fill. Perhaps a move back up to this point of control at some point, but I'm not seeing the impetus to do that. Where are our extremes from this area of balance? Well, anything down here near last week's low is the lower extreme. Anything up here between last week's high and weekly kickoff high is the upper extreme. Anything in the middle, we're going to be looking for short time frame control. Short time frame levels are likely to hold. The problem is there's a million of them right now. We've got yesterday's low, we got value low, we've got point of control from yesterday, we've got value high, we've got the range high from yesterday. Above that, we've got value high from 3 days ago. We've got the gap to fill up to here. We've got value low, we've got point of control, we got value high, and we got weekly kickoff high up above that. Problem with short time frame control, and it's sometimes a blessing, is short time frame levels are often respected, but there's so many of them you can get chopped up before you find the right one. So I'm going to be patient today. I'm going to look for some sort of structure in the day time frame, in today's profile and today's charts, to look for opportunities. If there's a low down here already, maybe it's the overnight low, that would be something I would look at, because it's already rejected this level today. In the overnight, yes, but it's today. So if we get an opportunity down here, this allows me to limit risk. If we find acceptance inside the gap here, perhaps a move back to the low side of the gap, the high of yesterday's range, could be something we could use to limit risk. And all of these, short time frame levels offer us that opportunity to limit risk. The problem again is, which one is most important? I'm looking at the overnight low as a pretty decent opportunity to limit risk. It's already rejected today. It rejected down here yesterday. It rejected down here the night before last. Is it going to reject again? We know we've found buyers there before. We can lean against those. And if it doesn't hold, if the price advertised at a price at a level that says this trade isn't going to work, we can get out of it at a small loss. All these middle are secondary kind of levels with which to look for opportunity, again, because they do limit risk, but with that many of them, it can chop you up. here's the euro, almost a perfect mirror image of the downside move in the dollar. We've got the euro continuing to hold upside structure. We got 1, 2, 3, 4, 5 points of contact on this trend line. This trend line breaks, could be a relatively decent pullback. Doesn't necessarily break longer time frame structure, but it could be enough to scare some of those that are holding longs to get out of some of those longs, to take some of those profits. So this is the March contract. It's rolled over, of course. Open interest is going to be useless. We added 70,000 in open interest yesterday. That is leggers getting into the spread so that they can move their positions to the March contract. Upside structure intact. We got the trend line here, a 30-minute chart. No overnight inventory, no movement. We're right near settlement. It's a very toothy volume profile yesterday. We're in an area that this could just fall into somewhat repair. We're inside value, very close to settlement, very close to point of control. Value low, value high. What about the TPO chart? What does that tell us? I'm going to say watch the downside today for the euro, ladies and gentlemen. We have pretty decent excess at the high yesterday. We have a poor low on the low here. And that's going to put us right up against that trend line where I think we are right now. If we break that trend line, this unfinished downside auction could bring us lower pricing for the time being. We have got, obviously, volume point of control here, TPO point of control here. That would be obvious visual targets. If traders are focusing on those levels, they will bring price there. Here's the 10-year, which has really been kind of a drag. The profiles are filled with unfinished upside and downside auctions. We lost 16,000 in open interest yesterday. This market is so short time frame controlled, I can't stand it. It's like the longer time frame traders are positioned and just sitting. Or they're out. Who knows? Who knows what it is? But still very range bound. Short time frame control over open interest, relatively inert. It's only 16,000. Price is centrally located between last week's high and low, the weekly kickoff high and low. I'm going to do some serious research on this market the end of the day today to find some really key weekly kickoff levels that I believe are going to be meaningful once we get to them. We've opened with a gap. We've not closed the gap. The market is heading in the direction. We have overnight inventory to the short side, maybe a little bit reconciled before the open, and we're seeing the market pushing down to naked points of control. Let's take a look at the TPO chart. Unfinished upside auction, unfinished upside auction, unfinished upside auction, unfinished downside auction. Okay. The most visuals that we can reach today are to the downside, and it seems like what our traders are focusing on. Our lower extreme here should be obvious. Our upper extreme also should be obvious. Anything in the middle makes me nervous. Makes me feel exposed. We don't want to be exposed. Look at this barcoding we've got going here. It looks like Christmas candy. Up, down, up, down, up, down. Range at obvious extremes. My brother calls this barcoding. It looks like a barcode, doesn't it? We're using range-bound rules today. In other words, when we're at the lower extreme, we're buyers managing risk that way. When we're at the upper extreme, we're sellers managing risk that way. But look at the 30-minute chart. Well, we just took a stab below the extreme of this week's range bound activity, and we see some pretty stiff rejection there. We've got overnight inventory that is very short. If this overnight inventory starts to get nervous, we could easily fall into repair, because yesterday was a double distribution trend day. We've opened outside the area of repair, but if we come back into the area of repair, then we may find that we're going to trade at, to this point of control, obviously, and to an assumed point of control in this upper distribution of time. It's going to be an interesting day. And, I've been thinking about taking the natural gas off of this, adding something else, thinking about maybe adding the dollar, the US dollar. But I mean, we're already looking at the euro, which is inverse of the dollar. So we get a good idea of what that's doing anyway. Yeah, I'm sure that natural gas does make stop placement difficult. It is a vicious market, that natural gas. But again, I'm thinking about taking it off. I don't think we have anybody here that's actively trading it. It was suggested a while back for somebody who was trading it. I don't even know if they're still here. Let me know. You can give me some input and some ideas on that. And if we like putting the dollar up there, or if there's another product we'd rather put up there. I'm willing to do 6 would be good. 8 would be a lot markets, but I do love the research and I do love what I do, so it's always a good time. Caesar, you trade the natty. Okay. JM loves the natural gas. All right. All right, well, we'll keep that. Yes, Serenity Trader, 8:45 Central, 9:45 Eastern. The PMI composite flash is due out, the preliminary number. And all right. Okay. It is Friday. Not going to see you for the recap. We don't do the recap on Fridays. So, manage your risk well today. Have a great weekend. Rest up. Spend some time with loved ones. Be kind to yourself. We work hard at this. We deserve it. We had, I think, some pretty decent success. We had a lot of traders today say that they were successful in trading and completing step 2 of the trading combine. Congratulations to all of you. And we're looking for all of your success here at Top Step. So, have a great weekend. And again, stay humble, grateful, and creative, and centered in your trading today. Take your deep breath with me. All right, let's get out there and have a great trading day. Profit. Trade well. I'll see you in the proverbial trading pit in just a couple of minutes. Have a great weekend, everyone.